A few of the notable bear market runs in history are the Great Depression of the 1930s, the dot-com bubble of the late 1990s, the housing bubble of 2008 to 2009, and the shortest bear market to date, witnessed during the COVID-19 pandemic 2020, 33 days. So in this video, we are going to discuss how to make money in bear market 2022. So the video is going to be amazing, so make sure to stick till the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. What is a bear market? Firstly, it helps to understand what a bear market is. A bear market is a market decline, defined as a price decline of 20% or more from recent highs. Bear markets can refer to stock indexes, asset classes, or even individual stocks, although they usually refer to stock indexes. Prices don't necessarily decline continuously during a bear market. Ways to make money in a bear market. You can make money investing in a bear market, especially if you invest for the long term, as bear markets offer an opportunity to bargain hunt for stocks. During the short-lived bear market of March 2020, almost all stocks in every sector were affected, including those that were fundamentally solid and not performing poorly. The same is true of the 2022 bear market. However, there are some precautions to take in your investment strategy if you invest in a bear market. Number 1. Ensure that you have enough available cash to cushion at least 6 months of expenses, especially as economic conditions are unfavorable. Number 2. Be able and willing to take losses on your investments as prices can continue to drop, even from 52-week lows. Number 3. Carefully research stocks you are considering buying to ensure that they have positive indicators. These investments can provide some relief during a bear market. Certain sectors. Some sectors are less affected by bear market conditions than others. For example, sectors that provide necessities such as consumer staples, healthcare, and utilities generally do relatively well as demand for their products continues, despite unfavorable economic conditions. Dividend stocks. Other stocks to consider during a bear market are dividend stocks. Dividend stocks protect with their guaranteed income. Regular dividend payouts also help ease the pain of rising prices as a result of inflation. Low PE ratio stocks. It's important to pay attention to the price-to-earnings ratio, PE, during a bear market. Value stocks with a low PE are more likely to perform well when compared to growth stocks with a high PE ratio. Gold. Gold is also considered a safe haven during a bear market run. The price of gold is uncorrelated to the stock market and often rises during volatile markets. Cash can be an option during a bear market. However, with inflation at 8% in the 2022 bear market, holding cash for an extended period will likely hurt. Short selling. There are ways to make money from falling stock markets, for example, by taking part in short selling, options trading, and investing in index funds. Tips for investing in a bear market. 1. Keep calm. Don't engage in panic selling during a bear market. Selling at a loss, when historically markets recover, might result in regret. To date, the only bear market that never fully recovered was Japan's stock market crash of 1989. 2. Invest for the long term. Investing in the stock market for a long time is one of the best ways to protect your investments in a bear market, especially if you don't need to liquidate your investments anytime soon. A bear market is not a good time to invest in the short term. 3. Don't try to time the market. It's impossible to time a bear market, and you may miss out on the opportunity to buy hidden gems if you try. 4. Pay close attention to when prices begin to turn. An upward trend can signal the end of the volatility of a bear market and an opportunity to jump in and buy stocks with less risk. 5. Diversify your investments. Asset allocation is particularly important during bear markets. Investing in bonds is one of the best ways to hedge your portfolio in a bear run, as bonds are inversely related to equities. When stocks are down, the returns on bonds rise and vice versa. 6. Adopt a dollar-cost averaging strategy. Keep making small purchases of stocks. This averages the purchase cost of your investment over time. It is also a way to ensure that you take advantage of the low prices and stay invested for the long term. 7. Invest in dividend stocks. As mentioned, dividend stocks can offer protection. Not only will the dividends act as a cushion to your investments, but once the bear market turns bullish, these investments will pay off handsomely. 8. Conduct research. Build your investment portfolio steadily with a mix of all the above through proper research. Do not be all in or all out during a bear run. Tip ranks can help you conduct data-driven stock research and make smart investment decisions. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.